Hey everybody, how we doing out there? Doc Severson with you here with a market minute. Today is Thursday. It's 2 p.m. Eastern time, a little bit after that. And I was just out and about today, and I'm watching the markets kind of fall to pieces here today. And I wanted to do a quick update and let you guys know what I'm seeing and some levels that you can trade against, either trade against or just understand what's happening. So we had talked about this quite a bit this morning in our morning session in the morning trading room at the Elite room. I'm going to hide myself down in the lower left-hand corner here. Good afternoon, everybody. So whether you're watching this live or whether you're watching this on a replay, I just want to give you guys just a couple of minutes of what I see in the markets here. Now, I'm using TradingView, and the reason that I like TradingView for something like this is they do a good job with the volume profile. And this can be really helpful to understand the volume profile when we have moves like this, because they show where support and resistance truly is. So first of all, starting with the spiders, in this case, I have to use the spider so I have volume. And what I'm seeing here is a very important level, which is right around, and we talked about this one this morning. We said that if we see the price, let's get this little artifact out of the way here. So I'm going to just kind of zoom in on this. If we see the price break down under 3,800, which is right in this area here. Let me get my pen so that I can draw for you guys. So I said if we saw the 3,800 level, which is the 380 level here on the spiders, if we saw that break today, then we were going to see a very quick trip down to the 370 level, which is down in this area here. And we're just about there, because right now what we're seeing about 373 or so. Yeah, about 373 right now. So about 370 is where I expect this thing to find some support, maybe as low as 368. We'll have to see. What I'm seeing is the formation of what's known as a head with shoulders pattern. So we drive into a new high, and then we drop down from there, and then we find some level of support, which is around wherever the neckline is. And then typically we do see some kind of a bounce from there, at which the bulls say, oh, that's okay, we're good to go. And it just creates a right shoulder, and then we drop from there. So the way that we can determine kind of the target for something like this, if in fact this is what happens, is I can take this thing up to here, and I have to do a little bit of work here to get this thing to cooperate with me, but roughly, if that is the level of the neckline that we're looking at, and if I draw another trend line here that represents the neckline, and we'll make this one a different color. If you're just joining me here, I'm just doing a quick market update. I'm seeing the market kind of fall through the levels that we talked about this morning, so I wanted to do a quick update here. So if this is a potential head and shoulders pattern that we're seeing, if we do see the right shoulder bounce from here, again, everybody's going to let down their guard, and it may create a very wicked lower high. So if that happens, if that lower high happens, what we're going to have is we're going to be left with somewhere around in this area. This is the lower projection for this. This would be the lower projection if we end up tracing out a right shoulder and then breaking down from here. Okay. Is it guaranteed to do this? No. This is all what we're doing with technical analysis. We're doing pattern recognition and trying to match up with things that we've seen in the past. So if we go from, let's just say the top here was 394. And then if we drop down to, let's say 351, that's a 43 point or 430 point S&P drop. If we divide 43 divided by 390, what is this, 394 up here. That is an 11% move. That's an 11% move. You got to understand that the S&P is barely moved yet, barely budged compared to the NASDAQ. We'll get to the NASDAQ next. So if this does play out, this is only going to create a standard correction to the downside, roughly 10 to 11%. And it will take a few weeks for this to play out to the downside, although the final thrust down could be rather dramatic. Now, what's all this stuff on the right-hand side here I'm looking at? These are the volume profiles. This shows where volume has, or price volume has been trading at what price levels. So to me, right now we're showing, at least for this level of price action, the major high volume node is right here around 336 or 3360 on the full S&P. So whether we look at this on the spiders or the full S&P, we're going to find a lot of support right in this area. Now that's not quite to the extension, or that's deeper than the extension for the head and shoulders, if that occurs. And if you're just joining us here, I'm just doing this doc. I'm doing a quick market update here. I'm seeing things kind of fall to pieces here, and people are getting nervous. And so I want to break this thing down and show you what you can expect to see with a certain degree of probability in the near future. So it looks like Jay Powell has spooked the market a little bit. What we're seeing here is, so anyway, let me wrap up the spiders. Spiders right now, downside target is about 350 or 3,500 to me. But it may bounce first before we get to that point. So the problem today is the 10-year note. The 10-year note continues to scream higher at this point, and Powell's comments basically hinted at inflation kicking in. Well, there's no way the Fed can do anything about inflation. It's the bond market will set the rates that are out there. So the Fed's going to be behind the curve again, and the market knows that and knows that there's going to be a disparity between what the Fed wants to do versus what the bond market's going to do. So that's always a concern, and this goes back to 2007 for me, when the Fed was like, oh yeah, we can control everything, we can keep they couldn't. All right, so this is a concern going forward. All right, let's look at the Qs. And guys, let me know if there's any charts that you want me to look at. Let's try to do this with meaning this time. All right, the Qs is what we typically look at for the NASDAQ. And so I talked about the Qs this morning, wondering if this is a right shoulder, and this may be a right shoulder. That may be all that we get for the right shoulder. So we talked about this being the potential neckline for this. And if that is the case, then our downside target is going to be right around this level. And notice how nicely that falls into place with this big pennant pattern that we had. Actually, this is a symmetrical triangle. So that brings our target for the Qs down to about 281. So if we do drop to 281 from the top here, that's going to be quite a move. Let's see, we're going to be going from 338 down to 281. Let me do the math again. 338 down to 281. So that's a difference of 507 or 57 points on the Qs divided by 338 again. And that's almost a 17% move if we get that far. So that's getting close to a bear market if that does occur. So we have lost what looks to be the neckline of this potential head and shoulders pattern. It looks like we have lost the neckline from this. So is it guaranteed to reach all the way down here? No. But it could do so very quickly because a lot of people are still leaning long to the upside, and the sooner that we get this over with, the sooner that we rip the Band-Aid off, the sooner that we get the correction over with. Okay? Does anybody have any questions? We've got a few people that have joined us here. Again, my name is Doc Severson for ReadySetTrade. Just doing a quick market update from what I'm seeing out there. We're seeing a lot of nervous folks out there, a lot of squirrely looking price action. I'm going to bring up my Thinkorswim platform because this does a better job of showing the actual price and what's happening out there. I like to use TradingView for the volume profile. Now, I'm watching these futures here, and this is just the S&P futures. If we start to see something happening here, now, what I've been talking to my elite folks all the time is like, I don't want to see an early rally. I do not want to see an early rally during the day. So we saw this today, and I'm like, no, please don't. And we actually did get a couple stabs at a rally today. And then this is around the time when we got the news from Jerome Powell, and then it's just been downward since that point. So what you want to see is, in a correction, you want to see early weakness in the first half of the day. You don't want to see strength in the first half of the day. Or if you do see really early strength, you want to see it faded back down. You want to see it drowned. You got to rip the Band-Aid off. That's the only, you can't do it slowly. The problem with corrections is that if there's too many people buying the dip, it tends to go on and on and on forever. True capitulation, this is where everybody goes, I quit, I can't take it anymore. And this is what I've seen in a lot of social media channels, is people just can't take it anymore and are tossing their cookies right now. So we may be close. We may be close. And again, I think it all depends on what happens here with the Qs. Here's the NQ here. And we may find some support close to where that 200-day moving average is. That's very, very common to see that. Any questions? Anybody has any questions or comments or anything that you want to know or get a read on from this? You can also look at the Russell. We haven't looked at the Russell all that much lately. Russell's just coming down a little bit. We'll look at the Dow Jones as well too. The Dow Jones is just barely moving yet. And a lot of that is because there's a big energy component. If we look out at Market Watch today, you can see that the NASDAQ is almost universally red. It's 9 to 1 to the downside. If we look at the Dow Jones, it's going to be a different story though. Dow Jones, well, actually, no. We do have Chevron though. Chevron is still moving to the upside. We have United Health, which is still moving to the upside. But what we're running into when you have these little mini crashes like this, is you get margin calls, you get redemptions, and everything gets thrown out the window. This is why, if you're a cryptocurrency trader, this is why crypto is down today, because everything's being chucked out the window. What about inflation? What about gold? What about silver? Let's look at those. What's happening? GLD down today. That's the gold ETF. What about silver? Silver is down today. This is because when we have these little mini crashes, everything gets chucked out the window to raise cash. This is always the case. So there is no safe harbor when we have moves like this. When the market gets scared, and we're down 2% today, we're down 2.5% in the NASDAQ. Again, these are not crash levels. It's like a slow motion mini crash that we're seeing right now. Okay, so let's see. What do we got there? Who let the bulls out? Let's see. We'll go look at the SPX here. Let's see. We hold 37.15 or we go down. 37.15. Yeah, I think that's pretty close. Let's see if we can do a trend line here on the SPX. If we connect the dots, and notice how well this plays out. So we have found support. To me, that's where the neckline is of the head and shoulders. And right now, this is right around where you talk about, which is 37.20, 37.15. So many assets playing out bearish divergence. Now, what I'd love to see is bullish divergence to the upside again. So we may see a little bounce. Now, notice what happened to the NASDAQ. The NASDAQ got a one-day wonder bounce like this, and then that was the right shoulder. That's all it got. That's the lower high. So even though it's technically not like something out of a chart patterns book on the NASDAQ, let's bring that up. Market doesn't care. Market doesn't care what your chart patterns say. Market doesn't care what your divergence or anything else says. Look at this. That's the right shoulder pattern. So again, we're playing this out to the downside. And what we're going to do is we're going to extrapolate what's the distance from the neckline, which in this case is much more horizontal. The neckline down to the downside, and this is going to play out right around the confluence of this support in this area, which is the volume profile, high volume node at this area, as well as the 200-day moving average. Very, very high probability of seeing some type of a bounce down there. Very, very high probability. Now, will this extend to the downside? It will continue to extend to the downside as long as we're getting margin calls, redemptions, everything else, people puking out, people scared. And it may accelerate into the close today. I wouldn't be surprised to see it accelerate into the close today. Remember, to rip the Band-Aid off, you've got to get everybody to absolutely buy in that this move is over. You've got to get everybody to buy in that there's zero future for the stock market. This is the beginning of a dark winter for the next 10 years, that this is the high water mark, that you'll never get this money back again. Right? I'm just speaking in hyperbole here, but this is the way that market bottoms are formed, is you got to get everybody to panic, capitulate, give up, quit, whatever, right? And it's not surprising, because we have so many brand new investors which are on board, which have never gone through something like this. A lot of these people moved over from crypto after a 3-year bear market, completely missed last year's crash, and got in at the bottom. So this is the very first time that they've gone through something like this. Now, compare this move versus what we've gone through over here back in September and October. About the same thing, right? It's just a regular correction that comes along. This is nothing new. Now, how this plays out over time, my rule number 2 of fractal energy is that reversals start from the inside out. They start from smaller time frames, but they propagate higher. So what we have to watch out for is, if and when we do finally bounce from this, believe we will, if and when we bounce from this and form something like this, if this turns out to be a lower high, that's a weekly lower high, and that's a very dramatic pattern. So we're going to be on pins and needles for some time now. And what's kind of thrown me off on this move is that we got here. So even though I agree that there are divergences showing up, we have bearish divergences everywhere, all the time. And in fact, one of my favorite indicators, the percentage of S&P stocks above their 200-day average, did not show a weekly divergence on the signal. Therefore, I believe that we're not yet at the top. I believe that we still have room to run. I believe that this might be just a short-term reset before we get our final run higher in the year, and then look out. That's my read on this thing. Okay, anybody have any questions? Anything else? Let's go back over to the futures. Let's see what's happening here. And we're getting a little left off of here, but again, unless we start to see this thing, like you can see at this point, we've got this level here, 3770. This is the ES, or the S&P futures. If we start to break over there, we may end up closing higher for the day. Now, what we showed from the S&P is that the price is down to a neckline. It should bounce here. On the S&P, technically, it should bounce here. The NASDAQ, we saw quite the opposite. The NASDAQ, we felt that it should continue lower until it hits its target. So it may hit its target and bounce first, while some of the other assets may take another week or so to find their bottom. That's something else that we can keep in mind. Okay, again, I'm Doc. Just a quick market update for today. Anybody else want to see anything? I'll sit around here for the next 2 minutes and not say anything. If there's any other questions or requests or anything else coming in, let me know what you got. Do you mind looking at WW? Before I do that, I'm just going to bring up these market internals that I watch. I'm not seeing panic levels by any means. If we were seeing panic levels of selling, we would have these close to negative 500 on the advancers minus decliners. In fact, they're lifting off quite nicely from the bottom at this point. Also, I'm looking at tick on the right-hand side here, and we're getting some real positive numbers. In fact, we're getting some buy programs kicking in at this point. Now, we did have capitulative numbers down here at negative almost 1,600. So when you consider that there's about 2,400 stocks on the NYSE, last time I counted last week, that's a huge percentage of them in sell mode. So the S&P may have bottomed out for the day. We'll find out. Typically, the 230 level is when I want to see a reversal. I like to see reversals in the last 60 to 90 minutes of the day. All right, so I'll put that one away. Keep an eye on the futures. Let's look at WW. This is usually when I get a request from somebody who works at a specific company and wants to know because they're heavily vested in their shares, and so they want to know. I don't know if that's your case, but usually I get these strange requests from tickers that I've never seen before. Like, I don't know what WW International does. But right now, this thing has been in a, if we look out at the weekly chart, the weekly chart's going to give us sort of a, this thing's been in a long, dreary, couple of years to the downside. And is starting to potentially lift off with a higher low, higher high, but it's almost like an ascending triangle pattern. There's very little structure to this at all. Oh, Weight Watchers rebranded. So this is not the type of stock that I typically will look at. I like to see, if I'm going to go long on something, I want to see something that's already in an uptrend. And this one, I don't like to go dumpster diving, per se. A lot of people are out there, and it's just part of culture these days. Like, they think the cheaper that something is, the better it is, and I don't disagree. I do like to trade inexpensive stocks, but I like to trade things that are generally in an uptrend. So I don't know much about Weight Watchers, and I'm not really a big fan of the pattern that I'm seeing right now. Now, do they have options? Let's see. Do they have options? Yes, they do. They have weeklies. So is there a trade here that you could trade below, say, like 20? Well, maybe. So we could go out like 43 days. Can you trade the $20 puts? Yeah, you can, but you don't get paid much for them at all. You maybe get 1% for doing that. Not much. Any other questions? Anybody else want to look at something or have any questions about what's happening today? Keep our eye on the futures. Let's keep our eye on the futures. If we're able to break above the 3770, the low of the day might be in. And I continue to see fairly good results from the internals with buy programs as well. Kind of some buy extremes showing up as well too. So somebody looks like they might have bought the dip, but we have to wait those final 90 minutes. Amateurs open the market, pros close the market. How the market closes is extremely important. Okay, any final requests? Anything else you guys want to see? Again, my purpose today was just to give you a quick market update. I saw the things like falling apart, and I know that when I was going through this, when I was going through my first correction, I was losing my brain because you focus on what you fear. And what it tends to do is to give you blinders. You can't see opportunity. All you can see is the losses mounting up. You don't know what to do. You don't know when to sell. You don't know anything to that. This is a rite of passage for every trader to go through something like this, to build faith in your approach, your knowledge, your platform, everything that you're doing. And you start to go through things like this, and it builds armor on you. It's like chainmail armor that you put on a link at a time. And after a while, you see something like today, and you go, whatever. And it's not that you've maybe anticipated it, because telling the future, the longer that I do this, the less that I realize that I can predict the future. That's not the case. And a lot of people think that the key to success in trading is to be able to be really good at technical analysis and be able to predict the future. That is not the case, guys. Probably the biggest thing that you can do is learn to ignore your bias and see things from both sides. Look at things from what if it were to go up? What about if it went sideways? What if it went down? What would I do? And anticipate those kind of things. Okay. All right, guys. Thanks very much. I just thought I'd jump on here and help out a little bit. So you guys are welcome to reach out to me either through the platform, or if you're just watching this on YouTube and not part of the 10X tribe, we do have a free community that you can join if you go to elite.readyset.trade. elite.readyset.trade and join the 10X tribe for free and do more of this stuff. All right, everybody, take care. And for those of you in the elite group, I will see you tonight. We're going to do our trade school as planned at 7 p.m. Eastern time. Everybody take care. Chill out. Watch the next 90 minutes. See ya.